Today, the US dollar index, which measures the US dollar against its 6 major partners, finally moved away from its 5-week lows. However, the main support for the American currency, as has happened many times, came not from real events, but from how these events might affect the future. For instance, the assassination attempt on Donald Trump during the presidential campaign in the US certainly caused a shock, increased volatility, and boosted the demand for safer assets among investors. These events' influence on future Fed Reserve decisions is crucial. If Donald Trump wins in November, inflation rates are likely to increase, disrupting the US regulators' plans to lower rates. Consequently, this would again raise the value of the US dollar. Meanwhile, let us find out which publications will be worth paying attention tomorrow, July 16. You're watching Traders Calendar. First, Eurozone investors will receive a report on Germany's economic sentiment. Given that the previous figure of 47.5 points was the highest since February 2022, the anticipated decline suggests stagnation in Europe's leading economy. Stagnation means a slowdown in both production and consumer demand. That's why the forecast of 47.2 points or lower will cause a drop in the euro against the US dollar. On the same day, Canada will disclose its inflation figures. Considering that the currency of the northern neighbor accounts for 9.1% of the US dollar index, a rise in the indicator might strengthen the Canadian dollar. However, significant shifts in this currency pair are unlikely, as the Bank of Canada was one of the first major regulators to start easing its monetary policy, initially putting its currency at a disadvantage compared to the US dollar. At the same time, the US dollar may fall on its own. Specifically, its price may react to the retail sales data that will be issued in the United States. If this indicator slides to 2.1% from 2.3% as expected, the dollar's value will also drop. Weak figures indicate a decline in consumer demand, signaling a cooling economy, and this factor is a sign for the US Central Bank to lower rates. Otherwise, the risk of a recession will increase, and this is undesirable for both the Fed Reserve and the current US president ahead of the elections. Input prices are another factor of US domestic inflation. If the data unveils a rise to 1.2% from the previous 1.1%, the US dollar might find some support. However, against the backdrop of a more significant political events, it will be quite insignificant. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.